Bitcoin's topped out. Altcoins are dead. The crypto market, multi-year bear market in front of us. Horrific, terrifying crypto winter, or at least that's what they want you to think. But this is not a regular crypto crash. This could be massive market manipulation. Think about it. Stocks have barely moved. The indexes are down like 1 or 2%, but crypto's in the ninth pit of hell right now. What you've been witnessing is a coordinated attack on the cryptocurrency market to trick you into selling your bags so they can buy your coins at cheaper prices. At least that's how the theory goes. We all love manipulation on the upside, not the downside, of course. Then we want to blame somebody. But this video is going to break down the kind of manipulation that does happen in the cryptocurrency market, how it's being done, and most importantly, what you need to do to stay in the game and stay ahead and make sure you're getting paid. Just look at the numbers. Bitcoin's crashed by over 20%. Altcoins across the board have been largely annihilated. Litecoin's been doing pretty good recently. Within 24 hours, over $1.3 billion in liquidations wiped out traders overnight this week. The total cryptocurrency market cap lost 25%. Now, if this were the stock market, Bitcoin would officially be in a bear market, but I think we have different metrics for how we look at these things in crypto, to be honest. We're built a bit differently. But in crypto, a 25% correction, it's just a well-orchestrated shakeout, isn't it? Since the last major dump in early February, long positions have started to build back up again, creating a juicy honeypot for them, the market makers, the whales, Wall Street exchanges, the perfect setup to take your money again. Retail traders have become over-leveraged, expecting an easy ride higher. There's never an easy ride in crypto. And when exchanges see too many long positions piling up, they don't want them to win. So that's when they can push the prices down, forcing liquidations, flushing out over-leveraged traders, giving them the perfect opportunity to buy back at lower prices. It's now the largest long liquidation event since 2023, when Bitcoin was below $30,000 in early February. I think was maybe the biggest liquidation event of all time in crypto. CME open interest was flat, meaning there was no major selling from institutional players. So this jump wasn't Wall Street exiting, although we have seen about $2.5 billion of Bitcoin ETFs being sold by BlackRock and Fidelity, and of course their customers, because not BlackRock and Fidelity actually hold them, but their customers that do. But they've exited quite a bit this week, which has put extra sell pressure on, without a doubt. But that's less of a cause and more of a symptom, because those people were shaken out. And the same players that triggered the drop are now the ones that are going to be buying back at discounted prices. We already see huge buy orders going on exchanges, huge amounts of Bitcoin exiting exchanges. We've seen this happen time and again. If you've been following the market, this moment shouldn't really surprise you all that much. The meme coin mania was exhausting the market. The criminality was exposed was kind of the final nail in the coffin. The momentum finally fizzled out in the casino. When Bitcoin profits flow into Ethereum, then into mid-caps, finally to meme coins, really there's nowhere left for the money to go. With Bitcoin's price trading between $92,000 and $100,000 for basically 3 months, these periods of extreme low volatility are always followed by a double-digit move. We hope they come to the upside, but this time it came to the downside. So some kind of reset was inevitable, and that's what we got. And now the manipulators have made their move. Massive swings in both directions, of course, are normal, even in a bull market, but this year, they're much more extreme. Since January, the frequency of flash crashes have been rising, showing the intense amounts of leverage in the system and the amounts of manipulation going on in the system. On February 25th alone, Bitcoin holders sold a total realized loss of $1.73 billion, the highest since August 2024, when the yen carry trade unwound. That's another clear sign of capitulation coming in, meaning this move lower was likely designed to shake out the weak hands before the next leg up. This is the game. Now, assuming, of course, we don't have macro absolute meltdown, stock markets meltdown over tariff fears and recession fears and all that stuff, then we're probably going to next leg up. In the not so distant future, it'll take a little time to recover. But this is the game. And if you don't know who's playing it, you're the one getting played. If you don't know the game's going on, then you're getting played. So who's actually pulling the strings here? Well, before we get into that, a quick word from today's sponsor. Thank you to COINTRACKING for sponsoring this video. Look, managing your cryptocurrency portfolio can feel like a full-time job, especially when you've been trading for years like I have. Heck, I even remember back when I first got into the cryptocurrency markets. I was so excited, but also pretty damn overwhelmed. Keeping track of all my trades, the wallets, all that stuff, taxes, what a nightmare. I had transactions scattered across different exchanges and so many wallets. And every tax season, oh gosh darn, I dread the heck out of that paperwork. That's where COINTRACKING steps in. With more than 1.7 million active users, including 25,000 accountants and corporate clients, this is a game changer, 100%. Whether I need an overview of my profits and losses, or whether I want to generate a tax report, COINTRACKING has it covered. COINTRACKING even supports over 300 exchanges and wallets, so I don't have to sit around spending hours manually inputting all the data, which of course sucks. Plus, it's the cheapest tool out there, and they even offer a free plan for up to 200 transactions. Pretty cool. And the tax reports, they're the most precise in the market, with support for 12 country-specific reports and 15 tax methods like FIFO and LIFO. And if you need more support, guess what? COINTRACKING's full service handles everything from the managing of your accounts to the filing of your crypto taxes. Doesn't get much better than that. So if you want to make managing your crypto easier, then check out COINTRACKING. Use my affiliate link in the description to get signed up for free. And if you go for a paid plan, you'll get a 10% discount exclusively using that link. And if you pay with Bitcoin, you'll get an extra 5% extra off. This is one tool you don't want to miss out on. Link in the description. Look, it's all the usual suspects: market makers, exchanges, mega whales, Wall Street. Market makers control liquidity, pushing price action in the direction that benefits themselves. They have gargantuan sums of money to do that with. Exchanges profit when traders lose, but also they win, collecting fees from triggered liquidations. Whales manipulate order books, setting traps to wipe out retail traders and to buy back low to the spot. ETFs have also suffered. Again, on February 25th, Bitcoin ETFs globally saw largest single outflow day since they launched, with 14,579 Bitcoin sold, over $1 billion of Bitcoin. Probably by the time you watch this, we'll have seen $3.5 billion or something come out this week. Historically, ETF selling has marked bottoms. We don't have a lot of history to go on, but usually marks bottoms, not tops. Look at what happened on May 1st last year. Similar ETF outflows followed by a major Bitcoin recovery. The pattern could be playing out again. The same whales who crashed the market are the ones who will be buying before the next rally. But it's not just whales and market makers. Donald Trump just launched a trade war on the EU, threatening 25% tariffs, which spooked the market again. The 10th tariff headline risk of the past 6 weeks. Been exhausting. You have Eric Trump over on X suggesting buy the dip from his tweet. Price was down like 10% or something like that. We saw this play out with Ethereum's drop on February 3rd, Bitcoin's drop on February 25th, and there's MicroStrategy, of course. Company has been relentlessly accumulating massive amounts of Bitcoin despite the gargantuan price swings. MicroStrategy famously buying every single local top possible. They've just announced another $2 billion in Bitcoin buys could be coming, yet their stock price has fallen almost 50% since November 20th, with record levels of retail and institutional money in the market, plus a pro-crypto U.S. government. It has created an extremely polarized and very volatile bull market. Gargantuan sums of money, incredible leverage, more leverage than this market has ever seen. It's absolutely bananas right now. It's been an incredibly hard bull market to navigate for a variety of reasons. Only tiny sectors outside of Bitcoin have popped off, and it's been pretty nuts, okay? But the worst move is falling for their tricks. So far during this bull market, none of the top indicators have flashed. I mean, there's been a few small things. Maybe the Trump meme coin was the top indicator, or we saw some moves in the big crypto apps and stuff like that. If you talk about on-chain indicators, technical indicators, stuff like this, we haven't really seen very much, at least in terms of that happening. Maybe a few signals tripped, which likely more points to a local top versus the top, again, assuming macro doesn't break down even more on us. Just remember, 20 to 30% drops are pretty normal in the bull market. We've even seen previous cycle drops up to 50% during bull markets, and then come back to rage on to much higher highs. Use of the crypto market fear and greed index can help, of course. This crash is enough to actually send the market back to extreme fear, a reading of 10, which is lower than the FTX crash, which is crazy. Remember, you want to buy into fear and sell into greed, usually. If this shakeout has got you messed up, try to zoom out, okay? Crypto's gone through much worse and has always recovered. If you have low enough time preference and you're able to not get liquidated, then you'll be fine. So here's what you might be want to be doing. Stay calm, don't freak out. It's all part of the process, okay? If you can't buy the dip, do nothing, okay? There's lots of opportunities out there for trading and stuff like that, but the best investors also know when to sit on their hands. A lot of people are trying to revenge trade, use too much leverage, or they just get washed out again and again and again. Don't get over leveraged, don't get wiped out. Always use stop losses, never use cross margin. Altcoin season, it's not over, it never really started, but we will have outperformance for altcoins again. But maybe the days of everything pumping are gone. Only strong fundamental coins will be the ones to get the most bid. There's so many coins now, too much dilution. If Bitcoin doesn't reclaim the channel lows soon, though, we could still see 72, 74K support range being tested before bouncing back. If we lose that, I mean, lights out, isn't it? Looking ahead, though, March could still be optimistic. Global M2 money supply. Yeah, Lark's talking about the M2 money supply again. Jeez Louise, this guy. Suggesting a recovery could be coming now. So the future Bitcoin's drop has certainly been larger than the most recent drop in M2, but we tend to be overreactive compared to other things. But if you look at past movements, they usually do follow the same directional trend. This is where, of course, the good investor is able to separate the signal, stuff like the M2, from the short-term noise, the recent price action. The ones who panic will transfer, of course, their coins from the people who are patient. Over the last 48 hours or so in the market, the whales have eaten very, very well. About 80,000 Bitcoin were sold for a loss during this period, which means there were buyers on the other side buying those Bitcoin, the whales, okay? The whales saw an opportunity, they take the opportunity. And in many cases, they've made the opportunity. Again, you have to ask yourself, stock markets are only 2 or 3% off of recent highs. And yeah, sure, the Magnificent Seven stocks are down about 10% each. But why is crypto getting hit so hard? It is very reflexive. It does have a higher beta. This is all true. But it's also a market that's much more susceptible to wild moves due to market makers and stuff like that, because the liquidity is much, much lower than the S&P 500 or Microsoft or something like that. Anyway, guys, I know it's been crazy recently. Better days will come for the market, okay? Try to see the forest from the trees here. This too shall pass. I'll see you in the next one.